I just want to kind of give you a scale briefly of the Federal CARES Act and some of its updates. To start, the original package was $2 trillion, which, to put it in perspective, is just under 10% of the GDP in our country. The package was designed to be robust because it's a bridge that helps us avoid a prolonged recession and downturn, and that once regular commerce can begin resuming, we can move back to normal commerce. So let's talk about a couple of the major provisions available to employers. I've broken them down to provisions that are available to all employers, and then the small businesses, the self-employed, independent contractors, and nonprofits. We'll start with the provision that's available to all employers. It's called the Employee Retention Credit. This is a late addition to the bill. The earlier draft did not include this provision, so there wasn't a lot of attention paid to it. This generally is required to apply to all employers, talking about businesses, but also nonprofits who are fully or partially shut down as a result of the coronavirus. Or we've had a 50% drop in their gross receipts in a quarter, and they're eligible for this, and so the gross receipts get back up to 80% of the prior year's amount. So how much is it for? It's 50% of the wages paid by the employer, up to $10,000 per employee, which is a long way of saying it's essentially a $5,000 tax credit available to the employer. There are some special rules for employers with more than 100 employees and employers with less than 100 employees. So if you have more than 100 employees, the benefit only applies to employees who you are paying but are not providing services. So let's say your business is shut down, you had this drop in revenue, your employee's not working, they're teleworking, but you continue to pay them. You can access this credit as a benefit in the recognition of the fact that you continue to pay them. Now, if you have 100 employees or less, the requirement that they not be providing services does not apply. It's available to all employees you pay during the eligible period. The eligible period being when you're shut down or when you've had a quarter with this drop of gross receipts relative to a prior period, the prior year's period rather. So importantly, if you have received the Paycheck Protection Program, which Diane I know said that number you had, because that can be converted into a grant, you cannot take advantage of the Employee Retention Credit. Because we know that a lot of employers are currently having cash flow problems, you can request an advance on this credit. About a month ago, the Treasury issued guidance to request a form from the IRS called Form 7200, Advance of the Employer Credits Due to COVID-19. So if you go to the IRS website and you search Form 7200, you can find that to get an advance. This will obviously allow employers to get the advance on the payment of the credit, which will help them pay their employees today. Okay, so now I want to move on to the one just that's probably gotten the most attention, so just for some clarity and then some updates. And the Paycheck Protection Program, or PPP, as I'm sure you are all aware. The original bill, it was $349 billion in small loans for small businesses. It means employers with less than 500 employees, the 501c3s, the self-employed, sole proprietors. As I'm sure many of you know, the program was tapped out and then went on hold briefly. So 1.6 million loans were approved by 5,000 lenders. You're encouraged to keep applying for the loan if you've not received it, because it has received more funding, which I'll go into. So if your business is generally qualified for an SBA program, you would qualify under this program. And in addition to that, some employers, some businesses who would not qualify were added, such as independent contractors and self-employed. It also includes restaurants and hotel folks who would otherwise be eligible, because if you add up their locations, they more than likely have 500 employees. So don't automatically assume that if you haven't applied for this program and you wouldn't be eligible, that you're not eligible. So how much can you borrow? You can borrow up to 2.5 months of your average payroll expenses. There's a formula to calculate average monthly payroll. And once that's calculated, you can multiply that by 2.5, except the loan cannot exceed $10 million. Lenders that participated and are continuing to participate in this loan are national and local lenders that are already eligible to participate in SBA 7A lenders. And all FDIC-backed banks and credit unions were and are also still eligible. There are very minimal requirements as far as underwriting these loans. There's no collaterals required, no personal guarantees required. And a really unique feature of these loans is that they can be converted into grants depending on what the borrower spends money on. So the way that the bill laid it out, it looks at the 8 weeks of your expenses after the date of the origination of the loan. So when you receive the loan, not when you apply for the loan or when you're approved for it. And you tally up everything that you spent on payroll, that you spent on rent for businesses, interest and mortgages that are tied to businesses, and spent on utilities. And you can get dollar for dollar forgiveness of that loan amount. And of course, your forgiveness cannot exceed what you actually borrowed. A number of people are saying, oh, well, what if I spend money on updating a website, or if I were to buy more capital for the business, such as rugs or a new front door, that would not be eligible. It would just be considered a loan. There are some loan forgiveness is reduced proportionally if you reduce the number of full-time employees that you had relative to a benchmark period. And that benchmark period is either the year before or the first 2 months of this year. The loan forgiveness is also reduced if you reduce wages for employees making less than $100,000 by more than 25%. That was the good note about wages above $100,000. In your calculation of payroll expenses, you can count the first $100,000 you paid an employee, but nothing beyond that. That's because this is really targeted at middle income earners. Employers can also avoid a reduction in the forgiveness if they bring back employees they laid off and restore their wages, generally within 30 days, and maintain those employees and those wages through June 30th. So the way to think about it is what the government is incentivizing. It wants to give money through small business, money to keep paying their employees. So now we're getting often asked, what if business shut down, or you happen to be in an area where Governor Holcomb said an essential business can't open? That doesn't matter for this purpose. Again, what the loan is looking at is after taking the loan, were you still paying your employees? Okay, so just a couple of updates going on with the Paycheck Protection Program. Before the refunding, about 1.7 million loans were approved, roughly by 5,000 lenders. 74% of the loans were under $150,000, and the average loan amount was $206,000. 3 Fridays ago, President Trump signed a nearly $500 billion in interim coronavirus bill, which includes additional money for the small business program, as well as funding for hospitals and testing. So roughly $2.7 trillion since the CARES Act passed has been spent. The Senate passed that bill by a bipartisan vote of 388 to 5. So the bill includes $320 billion more for the Paycheck Protection Program. The program, obviously, as I said, ran out of money because of high demand. There is still roughly $120 billion available for the fund today. An additional $60 billion of that bill signed will be set aside for businesses that do not establish banking relationships, such as rural and minority-owned businesses and companies. Expanding access to the aid was a priority for Democrats who worried that businesses were being shut out of the fund. An additional $60 billion was added to the EIDL loans, the economic injury disaster loans, $75 billion for hospitals, $25 billion for coronavirus testing, but it did not include additional funding for state or in local governments that Democrats had sought for. So, although the bill nearly totals $1 trillion, both parties have been referring to it as an interim bill, and interim legislation to bridge the gap between the $2.2 trillion in the CARES Act and the next expansive round of legislation for Corona's Phase 4 bill. So what could that look like? House Democrats this Friday are voting on their own relief package with a price tag expected to be more than $3 trillion, an amount that would be the largest relief package in history. The legislation, which allocates more funding for state and local governments, coronavirus testing, and a new round of direct payments to Americans to the amount of $2,000. And an immediate clash with Republican-controlled Senate, where leaders have said another round of emergency funding isn't yet needed, and this bill is more than likely going to be dead. Okay, so going back to the Paycheck Protection Program, the U.S. Chamber released a 4-step guide to prepare you for applying for one of these loans. It goes through in detail who's eligible, how you calculate your monthly average payroll cost, what your lender might be looking for if you show up to apply for a loan still, and how your loan forgiveness could be calculated. It's been such an effective guide that the SBA has been using it in their social media posts. All right, so another provision that benefits small businesses, the self-employed, independent contractors, and nonprofits is the SBA Economic Injury Disaster Loans, or EIDL loans. So I kind of alluded to that was re-upped with $60 billion a few weeks ago. They've been around for a long time. If you might have been affected by a tornado or some other natural disaster, you might have applied for and received it. Again, this is available to all small businesses, the nonprofits, including faith-based. No restrictions here on the type of nonprofits. This is an actual loan. This does not convert into a grant. You could, the way the bill laid out, you could buy up to $2 million in working capital that's repaid over 30 years. And you can see the low interest rates there. That $2 billion was significantly cut down just by the amount of demand and looking more like $15,000 to $20,000. But that was before that the loan was re-upped. They made it easier for businesses to apply. Your loan is going to be based on your credit scores. You don't have to immediately produce tax returns. You can get up to $200,000 without personal guarantee, and no collateral is required for $25,000 or less. Beyond that, there's a general security interest, or sometimes it's secured with real estate, but they're trying to move away from that real estate in this particular instance. There's an important feature that's brand new to the CARES Act. If you're applying for an EIDL loan, one of these economic injury disaster loans, you can request that you provide an emergency grant up to $10,000, $1,000 per employee. The bill details what you may use the grant for, but there's no requirement. So hypothetically, if you applied for the loan and you request an emergency grant and you got the grant and then you were denied the loan, you still do not have to pay back the $10,000. Essentially, an emergency grant for small businesses. There are some important interactions with the Paycheck Protection Program that we just talked about. More importantly, for example, if you end up with both, generally you would end up both because you've already gotten an EIDL loan. Now that the Paycheck Protection laws have been set up, you can roll them together, but you cannot get double forgiveness for the $10,000. That $10,000 would come off your Paycheck Protection Program's forgiveness. There are some requirements with respect to the Paycheck Protection Program that you can't double dip. So in other words, if you took out both loans, you cannot take out both loans to pay the same bills. So if you're thinking about doing this, you want to think about these restrictions. So don't assume that you can do all these programs and just stack them up. What they did is make the Paycheck Protection Program most favorable and then tacked on other programs who do not avail themselves of the Paycheck Protection loan, and that includes this EIDL loan. This one, you do not also go to your local bank. You go to the SBA website at sba.gov. This is one where chambers and other 501c6s can apply for. Chambers can also receive the employee retention credit, but they have to be substantially down or that reduction in revenue relative to a prior year period. So you want to think about that with the folks that are doing your taxes. And with that, before we jump into what returning to work looks like, Diane, I will kick it back to you for any questions that might have come up before we move on.
Ryan, is this a good time for me to introduce Kim to answer some of those specific questions from a CPA expert?
Yeah, that would be great. Either way, you know, how you ever want to take the questions, that'd be fine with me.
Okay. Is this kind of the, I think this probably is a great time to do that. And Kim, I do have a brief bio for her. So hopefully you can all hear me. Sorry that we are kind of freezing that video part, but I'm glad that hopefully you all are able to have some good audio connection through this. So I'm proud to introduce Kim Storin. Kim and her husband Greg are the owners of Storin Financial. They have offices in both Zionsville and Brownsburg and are wonderful Boone County Chamber members. They serve their clients in surrounding areas and across the country. Their company offers financial advice, services, tax planning and preparation, and a variety of business services. Kim manages the store and financial tax staff as a senior tax professional and specializes in working with small businesses. She is an EA enrolled agent, the most highly awarded designation given by the IRS for tax. Kim loves working with businesses to make sure they are on a path to success and understand how taxes will affect each aspect of their business. So Kim, thank you for joining us today. We have, please provide questions via the chat, or if you want to put yourself on video and raise your hand and speak those through audio, we'd be happy to take those also. So Kim and Ryan, is it best if I just read those to you, those questions? Okay, so we have a question. If I could ask if the SBA is actually funding the EIDL loans yet. This individual has applied weeks ago and hasn't heard any response.
Diane, I can speak to that.
Okay.
Back in the beginning, when they created the EIDL and they created the PPP program, the EIDL, the purpose of the EIDL was really to give everybody kind of a $10,000 bridge before the PPP could be approved and funded. Unfortunately, there were snags and hiccups with the EIDL and it just didn't get funded. And actually the PPP money came out way before the EIDL money came out. And originally the EIDL was just supposed to be $10,000 to anybody that applied. Well, once the PPP got going, within probably maybe 3 or 4 weeks ago, some people were started to receive the EIDL money and they reduced it down to $1,000 an employee. So if you had 5 employees, then they were only going to send you $5,000. That has been ongoing. They're not accepting any more applications, but I do know several people that have not been funded yet. And I feel like maybe that money is just trickling out slowly. They have refunded the program, so everybody should be funded at some point. But at this moment, there's really, Ryan, I don't think there's any way to check on your application, is there?
So if you go to treasury.gov or SBA's web or SBA.gov, there is a way to create your own login and website where you are able to check the status of your application. But to what you're saying, Kim, that is what I'm hearing across the region, essentially across the country, that these loans have been slowly trickling in for EIDL loans, to the point where I've heard success stories that people have started to receive them as late as yesterday.
Yeah, so it's been very slow to come in, but don't give up. I think they're still working through the applications that they originally received.
Thank you. So I'm going to go on to the next question. On PPP loan debt forgiveness, is it all or nothing? So an example, you received a $100,000 PPP loan, but can only spend $90,000 in the 8-week period. Will the entire $100,000 need to be repaid, or only the amount not spent? Great question.
Great question. So there's been a lot of confusion on different percentages. It will be what you spend. So if you only spend $90,000, then you'll have $90,000 forgiven, and you'll have to pay back $10,000 at the 1% rate over the 2 years. There's a couple criteria to it. There's the 75% and the 25%. There's been some confusion on that, where they said only 25% can go towards rent and utilities and mortgage interest. The rule is you can spend up to 100% on payroll, but you can spend no more than 25% on rent, utilities, and mortgage. So if you're able to use it all for payroll, great, then 100% of it will be forgiven. If you can't quite get there, then you might be able to bridge the gap with rent, utilities, mortgage interest. The problem that a lot of people have run into is the calculation to get the loan was 2.5 times your monthly payroll, but to spend it was 8 weeks. So people are trying to spend 10 weeks worth of payroll wages in 8 weeks. And sometimes you just can't do it without maybe bonusing or other options out there. So people are using rent and utilities to kind of bridge that gap, but no more than 25%. There's also the calculation for full-time employees if you maintain your staff, and that also reduces down if you don't maintain the same number of full-time employees or if you don't use all the money. So it is a stair-step forgiveness. And Diane, I think you're muted.
Yep, I am. Ryan, do you have anything to add to that before we move on to the next question?
No, I think what Kim said is exactly spot on. I would just say that the only thing that are kind of different is there's a number of different plans coming out called the Paycheck Protection Financial Assistance. There's a number of different sort of caveat plans that are being kind of tossed around or thrown out there, potentially changing the 25% and 75%. So you just have to keep informed as to what is going on in Congress as they're coming back this week.
And that's really been one of the hardest things, Diane, is from the very beginning, everything got rushed out. And so the rules and the calculations and the information out there has almost changed weekly or daily. And so it's been, and even now, they could go back to legislation and change the rules of the PPP program. But at the moment, this is what we've got.
Do you know if, I was just asked this morning, actually, if lenders are still taking those applications for that PPP, and are there still funds available? If
Yes.
somebody hasn't applied yet.
Yes, they thought round 2 was going to go within about 2 days, but they actually had enough funds that there is still funding available, so you can still apply through your bank and receive funds.
Okay.
Now the deadline, if you receive the PPP and you decide that you just don't want it or you didn't need it, you have the ability by May 14th to return the funds, and you don't have to go through the forgiveness process.
What about speaking on those returning funds, just like the prior question we had, if you know you're going to be able to utilize 90,000 of that, can you return that $10,000 that you believe you won't be able to utilize? Can you return just a portion, or is it all or none in returning?
I have not had that question. Ryan, have you had that question? I know that I would assume that if you cannot use all of it, you might be better off to just wait and have it as a group on the forgiveness, and then it correlates with your loan documentation. But I don't know if Ryan, if you've heard anything different from that.
No, I mean that's what I would assume, is that you would just wait until the program runs through June 30th, and then you can assess how you would return that money.
Okay, great. So we'll move on to the next question. An independent contractor pays quarterly taxes and obviously file, but so this question was from an independent contractor. But I keep the rest of my earnings. I use my Scheduled S that I don't use a payroll company. How do I prove that I paid myself from my individual bank account to my personal account?
Independent contractors have been a different animal from what we hear and read in the news. If you were self-employed and you did not have any payroll, they based it on your net earnings from your Schedule C. So if you had a Schedule C, line 31 was your net earnings of your business. So let's say your net earnings, $30,000. You received, if you divide that by 12, you get 2.5 times your monthly net earnings. Has nothing to do with your estimated taxes. Once you get the PPP, they're actually not making you go through any hoops. You automatically get a forgiveness of 8 weeks of your 2019 Schedule C, that bottom line, that 30,000 divided by 12. So you're going to receive 2.5 times. You automatically get a forgiveness for 2 times that number. On top of that, you can do payroll, or you can use the remaining piece for rent, utilities, mortgage interest. They are also allowing you to use your office and home, if you work out of your home, as a way to calculate that mortgage interest and utilities number. So that is how you can kind of bridge that gap. It's a little bit different for self-employed. If you have no employees, then you do not, it's not about payroll, it's about your earnings on line 31.
Anything else on that, Ryan?
No, I think that's pretty good.
Okay. So this kind of piggybacks on what you just said, Kim, but I'm going to read it anyway in case you want to clarify anything different. So when they talk about mortgage interest, is that on commercial space for the business or on personal homes? And I believe you just addressed that if they're working from home, but I'll let you clarify.
Then it comes back to, are you self-employed? Are you a sole proprietor with a Schedule C and you have no employees versus, or not necessarily no employees, if you're a self-employed person and your office is really out of your home versus if you have a business and that business rents or owns the building that you're in and you have mortgage interest. So it can be mortgage interest for anybody, or if you're self-employed, you can use your own primary home where you have office and home.
Thank you for clarifying that. Okay, here's another question. So a small business received PPP funding and they want to know if they can provide a special bonus payroll to their workforce to help use the PPP funding. They had to reduce wages a few weeks ago preceding the PPP and would like to pay a bonus to those employees to help cover the costs that they are incurring. Is the bonus forgivable?
This is one of those tricky areas because the definition of payroll wages that the SBA put out did not include bonus. But the general thinking is any payroll wage that you pay, whether it be commissions or bonuses, will be considered part of the forgiveness program. And so the bonuses have been a great way for people to bridge that gap if they can't get from the, the last, 25% of the money that they're giving additional commissions or additional bonuses to the staff that made it through the process, or just anybody that you want to give a bonus to. I would go ahead and do that. I think they're going to allow it, especially if it falls under payroll wages. There just has been a little bit of confusion because bonus wasn't specifically stated in the regulations. But I would definitely, that is a great way. It's an awesome way to benefit your employees. It's a nice way to spend the money, and it's a nice way to use up that money.
So Ryan, anytime you have anything to add further, let me know. Otherwise, I can just keep going through the questions also.
Yeah, I would just add on. It's just like it's that gray area that what Kim was saying. It's supplemental payments, and a lot of people are just envisioning that bonuses and kind of commission payments sort of going hand in hand.
Diane, the other area that's been a little confusing that I've gotten a lot of questions on is the $100,000 cap. They have put into the regulations that you cannot pay an employee for the forgiveness piece more than the equivalency of $100,000 a year. What that means is that over that 8-week period, if you pay somebody more than $15,385, it does not go towards the forgiveness. So if you spent $20,000 on one employee, only that first, what was that number? Yeah, only that first $15,385 can be used as a forgiveness. there was some confusion that some people thought if you were paid over $100,000 for the year, you couldn't be, none of your wages could be used. And that's not the case. It's just you're capped at $15,385. And so one nice thing to do that if you're trying to reach that limit is if you're an owner, then you could increase your pay to make sure that you're at least paying yourself $15,385 in that 8-week period. So if you normally take a salary of, $500 a week, then take that up to maximize at least your piece of that. But that's been a little confusing for some people on that $100,000 cap.
Great. I know we've received a couple of questions regarding that. I just want to make sure. Special bonus. Okay. This probably, maybe you can elaborate on this as this is different. So there's another question that was asked, can you consider payroll expenses from, yeah, this is different. Can you consider payroll expenses from before the PPP loan was funded? So prior to getting that PPP dollars.
And that's an absolute no. What they're going to do is they're going to look at your payroll report from the date you received your money, 8 weeks out, and you've got to create a payroll report to show your wages that you've paid from that in that 8-week period. So there's no way to include anything before or after. So unfortunately, there were some people that had big commission payouts or bonus payouts that they had paid out on like first quarter money or fourth quarter money that hit before they received the PPP. And there's just no way that once you've paid that and the paycheck date was before that 8-week period, it does not count towards.
Okay.
And then I know that there's been some confusion if you can include the taxes that the employer pays towards payroll, and that is not included either. So when you run a payroll, if everybody's familiar with that, usually you run a payroll, you have out of your account comes money for the net pay for your employees, and then you have the taxes that come out. Well, you've got to be careful because the PPP is for the net pay plus the employees' money that comes out. So you're really looking at gross wages, not net wages. So it's going to be the net money that comes out of your account plus a piece of that payroll that comes out of your account. So you can't necessarily look at what just comes out of your bank account. You've got to look at your payroll reports to see gross wages. And it does not include the wages, the taxes that the employer gets to pay.
Okay, thank you for that. I know, is it all right if we just continue on these? We have multitude of questions. Ryan, Kim, both of you. I know something that I've received several inquiries into our office, and Kim, you and I spoke a little bit about this. So people are having questions, they have the PPP money, and especially if someone possibly is a sole proprietor, self-employed, that can they utilize, they're the only employee, can they utilize that to pay a contracted employee? So if someone wanted to hire someone to work on a specific project, could they, pay a contracted employee for that, like a 1099 instead of a W-2?
And 1099s are absolutely not part of the calculation either. What some people are doing is they want to hire somebody that was normally a 1099. They're asking that they actually put them on payroll for this 8-week period. The IRS always would rather people be paid through a W-2, and this just encourages people to take 1099 subcontractors and put them on payroll, because it's only payroll wages that count, not subcontractor 1099 wages.
Thank you for clarifying that. Okay, so this is more informative to everyone on this call, and if people need this information, I can provide that also. So Diane Hubbard is on this call, and she's letting us know that loan applicants who have not received answers on kind of the status of their loan may call Congressman Baird's office to assist with an inquiry on their behalf. And I'll give you their number. It's 317-563-5567. And she stated that Alex Hickner, Hickner, or Matt Rowe, ROW, will be happy to assist them. So that's just a connection for you if you need to reach out to them and have them help you with getting clarity on that. So another question, and I think we answered it. It was another question: can employers pay bonuses to employees to help spend the money? And we've already addressed that one with that. So another question on being self-employed. On a self-employed individual who was who has been considered receiving their PPP money as a seasonal business, is there another percentage calculated to estimate the owner's share of money instead of the 852, the 8 weeks out of 52? So I'm assuming I'm interpreting this, maybe somebody is just doing seasonal work, whether that's landscape, or maybe it's just, a tax preparer that's just working during tax season. Is instead of that 52-week, kind of 8 weeks out of 52 weeks calculation, is there any other calculation? And actually it would be that 10-week that people are getting that PPP, right?
So for seasonal employees, in order to understand your maximum loan, it's 2.5 times the average monthly payroll for an 8-week period between February 15th or March 1st, 2019, and June 30th, 2019.
So instead of using a 12-month look back, you look at a seasonal piece from February 15th to the June 30th. But that was to obtain funds. That was not as a forgiveness of the funds.
Okay. All right. So just to expand on the mortgage interest, an additional question. But is the mortgage interest on a home prorated to the square footage of the home office, or is it for interest on the total mortgage? How and when will all of this need to be validated, and in what manner?
It is the same calculation that you would do on your tax return. On your tax return, you have office and home. And so you have the square footage that you use primarily for work versus the square footage of the entire home. So let's say you're using 8% of your home as an office, then you're going to take 8% of the mortgage interest and 8% of the utilities. That is usually, that was defined on your 2019 tax return, or if something has changed in your situation, then you just have to prove that for the forgiveness on the percentage that you're using your home for. And the banks will have that calculation for us to use. Now keep in mind, you don't get to double dip. So if you're going to use that as your forgiveness, at the moment, you don't get to deduct that on your 2020 tax return. The IRS came through and said that if you use $90,000 of wages as to allow for forgiveness, you don't get to deduct that on your 2020 tax return. There's a little bit of a fight in Congress for that at the moment, because Congress did not want the PPP loan to be taxable income. So they said it was not going to be taxable income. The IRS on the flip side said, that's fine, but you don't get to use the deductions, which in essence made it taxable income. So Congress is trying to go back and change the rules to say that if you receive PPP, you actually do get to deduct those expenses, but at the moment, you don't get to double dip your expenses if they were used for forgiveness. And the same thing applies on that office and home. So it is only the percentage that you're using for business.
Great. We're gonna take one quick question because we want to, as we're all planning on how to safely and effectively reopen, we want to make sure we have about 10 minutes for Ryan to kind of guide us through that. And then we will take additional questions at the conclusion. So we'll do one more quick question and then keep the questions.
Diane?
Yeah.
That will take me about 30 minutes to go through. So perhaps we can come back to this, or we can do another webinar and focus on the questions right here. Does that work?
Yeah. All right. So we'll just keep these questions coming. Okay. What about a single owner S Corp who draws a paycheck once a year at the end of the year? Can they pay any amount they would like during the PPP window, say 6 months' wages, or are they limited to only the equivalent of 2 months of pay?
That's a great question, and you are not limited. A lot of people pay differently, so they're looking, the loan amount was based on an average of your 12 months, even though you really only gave yourself one paycheck a year. The key is that if you get PPP money, that you probably need to do that paycheck in your 8-week period. Don't wait, and it can be the full year's salary. And only up to that $15,385 number is what you can pay yourself in that 8-week period, no matter what. So if you only took a paycheck for the year of $12,000, you could still take a $15,000 paycheck in these 8 weeks. So you're not limited to 2 months of your normal salary. You can pay anything that you want for an owner, up to that $15,000. So you're just going to do your paycheck a little early this year.
Do you have anything that you'd like to add to that, Ryan, or any insight on what you're hearing regarding the PPP also? That's the end of our submitted questions for now. I encourage attendees.
I'm glad that we had Kim on for this call. There's a lot of these questions that I wasn't totally sure and I've been asked before, so I really appreciate her expertise.
Thank you.
We appreciate that too. It's been wonderful through these webinars that we really are able to, showcase and engage, our wonderful chamber members we have. They're a great resource to community and members, as well as business representatives. I know Kim and her team are available to help all of you, maybe with any additional questions you have, or tax and financial services that you're in need of with that.
And Diane, there's probably one more piece that we haven't touched on.
That's what I was going to ask you, what you're hearing. Yes.
There's really two pieces to the PPP. One is that you've spent the money. The other piece is the full-time equivalent, that you've maintained your employees. And so what they've said is that you've got to maintain the same number of FTEs, which is full-time equivalent employees. There are 4 or 5 definitions for an FTE, but according to the PPP, they're really saying an FTE, a full-time equivalent employee, is an employee that works over 30 hours. It may be 2 employees to get you to 1 FTE. So if you have 2 part-time employees, it may be 2 employees that equal 1 full-time equivalent employees. So part of the program is you've got to maintain the same number of employees that you had when you were paying them over the 8 weeks. So that's another little bit of a struggle for people, that you may be able to increase your payroll, but if you've lost a couple employees, you may not have the same number of FTEs, and your loan forgiveness will be reduced if you do not maintain those numbers. So it's the other kind of piece that's a little tricky for some people, because sometimes they've just lost employees and they haven't come back. I know some employees went on unemployment, and when they got offered back their job, they were making more on unemployment than they were working. But the IRS, the government's come back and said that if you're offered your job and you refuse it, you are not allowed to take unemployment. So as an employer, that's an important part of, you offer one of your employees their job back and they refuse, you need to let the Department of Workforce Development know that they refused that job and they would no longer receive unemployment. So that was one thing that I have heard quite a bit, several questions on what's the definition of a full-time equivalent employee.
And thank you for addressing that, because I actually have a response from an attendee on the chat saying thank you for touching on the FTE topic, because they did not realize it could be split between multiple people if it needed to be. So great information.
And really, the spirit of the law was to give employers money that even if they were shut down, that they had the money to pay employees so they didn't have to go on unemployment. So I know some people have received the PPP and they're still closed. The idea of that PPP is that you're paying your employees instead of having them on unemployment. It may feel weird because you've got money going out the door and your employees aren't working, but that was really the whole spirit and the reason that money was there, because they knew businesses were going to be shut down for about a 2-month period. And they wanted that to go to the employees, and they wanted the employers to give that money to the employees instead of them flooding the unemployment system.
And keeping unemployment solved, the unemployment insurance system solvent.
Yeah. It was just a little bit of a delay getting the money out. And so I know a lot of people went home and just filed unemployment because they weren't getting paid. But the PPP will allow you to bring them back on, even if your store is closed, or even if you haven't, if you're not up to 100% open.
And that resonates, just the culture, with employees too. That's, very positive.
Mm-hmm.
So kind of a win-win for everyone on that. Anything else, Kim, on that topic? Yeah.
And you look like a superstar if you pay your employees and they're not working,
right.
And they're like, wow, you're so generous. Wow, thank you so much. And so then you get a little clout for that.
I agree. So we'll keep going. They're coming in. We've got about 3 minutes. We'll try to be conscious of everyone's time here. Does it make any difference if employees, I think you probably just said this, but does it make any difference employees are actually working, or if the business is currently closed, but we are continuing to pay them? And you just addressed that. Is there a way to recoup any funds that were paid out to employees of a closed business before the PPP came through? So if you were, no, okay.
Yep, because it's really that 8-week period, and that is the only thing that they're looking at. And I know some people are almost, they're prepaying their employees, trying to use up the money, so they're kind of prepaying their employees. You got to be a little careful of that because your employee could leave and you've overpaid them, and it's not quite what the PPP was meant for. It was meant to really maintain, and so they may look unfavorably if you're prepaying an employee.
And Ryan, you might have some information on, it's kind of part of that question too, but even going forward, the disaster loan and the PPP have been the main 2 financial grants and loans available to folks. And are there any other funding resources out there to help businesses currently besides those 2 programs? I've received that. I know there's a few things locally, like our local EDC has a emergency loan, through all of this that's available. But do you know anything else more on a federal level?
Well, so what the Treasury is doing is that, particularly for mid to larger sized businesses, they're setting up federal credit facilities. It's called the Main Street Lending Program, where essentially businesses with up to 15,000 employees are able to seek loans from the Treasury Department and there's issuing guidance is still going out regarding that issue. But kind of moving forward and kind of the reverse role is what liability is going to look like to make sure that businesses are protected. So in the long run, they save money and time and capital.
Mhm. And like Diane, you touched on, I know Hendricks County and Boone County both have programs for businesses that are reopening, grants that you can apply for. I know a lot of my clients have applied for those grants as they're trying to reopen their business. They're small, but every little bit helps if you're closed.
Right, most certainly. So for our attendees, are there any other questions? We probably have time for about one, and that is all with that. Thank you both, Ryan and Kim, for being on this call. I know that hour goes very quickly. Ryan, I'll be in touch with you this afternoon. All of you on attending today, as well as we do record this, so we know that people will be listening. We do have a YouTube channel, and we will send that out via email also. So I suspect that we'll have some additional questions, so maybe we can bring Kim back at some point too. But most certainly, Ryan, thank you for the offer, to be back on, hopefully within the next week, as businesses are developing their plans to reopen, fitting the guidelines from the governor, depending on, what industry they're in and when that reopening can take place. And we also know that there are businesses out there that, may delay their reopening because they want to do it when they were, most certainly prepared for that, to do that safely for not only their employees, but for their customers. So we know everybody's reopening plan looks a little bit different. So as a chamber, we are here for things just like this, to connect them with clarity and resources and some guidance. So I know I've read through the U.S. Chambers, guidelines, kind of their playbook for all of that. And I think it would be valuable to have you jump back on a webinar to kind of go over that playbook, as well as answer any questions. I mean, I love that we get so many questions, and we're glad to be able to have the experts here to answer those. So that being said, if everyone on this call has any additional questions, most certainly send them to me. Let's do it that way. And then I can kind of field those, whether it's through Kim or Ryan, or even if it's not based on today's topic, if there's something that you're experiencing through, that reopening or financial assistance, whatever that may be, let us know, and we will invite the experts to address on that topic. What we need to know is what are, the challenges you're facing. We most certainly want to help connect you with some solutions. We know this is, an ongoing challenges for sure, but we want us all to be able to, really move forward and get back to doing business, safely and effectively, and continue to do that each day. Kim and Ryan, do you have anything additional to share?
Thank you,
Just really
Lexi.
appreciate the opportunity to being on today, and Kim's expertise was definitely very valuable. And I'm glad that the video stream actually began to work well at the end of the call.
Hey, we made it through, didn't we?
Great. Thank you, Diane. Thank you, Lexi.
Thank you. Thank you for your team. And again, Ryan, thank you. I know Lexi and myself and our role, with the Boone County Chamber, the information that you and your team have provided has, just been instrumental in helping us to help our members. So thank you again.
My pleasure. Have a good day.
Bye.